Well, the week has started off with global markets on the back foot. We're seeing US markets, in fact, seeing huge cuts, 2% plus. But before we get to that, let's try and understand what's the backdrop, what's the reason behind this. One is, of course, concerns of a hawkish Fed going forward. There's, of course, the Jackson Hole Symposium where the Fed chairman, Jerome Powell, is expected to speak, and there is some hawkish commentary expected there. So that's one area which is leading to the headwinds in markets at the moment. The other area is, of course, growth concerns going forward. That's definitely going to be on investor radar. They're going to look at how earnings are going to play out in this time where growth seems to be a concern across the board, across regions, across the world. So those two reasons is largely why US stocks as well as European stocks as well as Asian stocks currently trading negative. We're seeing cuts of almost 2% on the Dow, 650 points lost in a single day by the Dow. 1.9% down is where the Dow was yesterday. The S&P 500 was down 2.1% as well. So strong cut on the S&P 500, which is now down nearly 4% from its recent high, if I may call it. And the Nasdaq is down over 2.5% to start this week off. And when we're looking at it sectorally, it's quite secular. Across the board, all 11 sectors of the S&P are down, they're lower. So clearly the fall is pretty much secular is what we're looking at. It's broad based. And largely the focus, as I did mention, will be on the Jackson Hole Symposium this week. And the Fed chair and his commentary around the Jackson Hole Symposium this week will hold the key as to where markets are at least moving in the near term. Moving quickly on to Europe, European markets saw cuts as well. We saw the stock 600 down 1%. We saw the DAX down over 2%. Clearly cuts across the board, even in Europe. And of course, those negative cues have now flowed into Asia, and we're looking at cuts across the board in Asia as well. We're seeing the Nikkei down over 1%. We're seeing the Shanghai as well as the Hang Seng down around 0.5%, and we're seeing cuts of around almost 1% on the Kospi and around 0.5% on the ASX 200 as well. We're expecting the SGX Nifty to trade, SGX Nifty is trading lower by around 0.5% as well. So we're expecting a cut of around 0.5% on the Nifty at the open as well as we speak. However, when we're looking at the Dow futures pre-market, slightly higher. So a slight bit of recovery, at least in the pipeline at the moment where futures is concerned. But of course, need to wait and watch how that plays out when US opens. Moving quickly on to commodities. Speaking largely of oil, oil is in the news on the back of the fact that Saudi has released commentary largely around depleting or reducing its oil supply. They raised concerns on the fluctuation of oil prices, and of course now with US and Iran in talks, there's possible added supply in the global market, and Saudi therefore may reduce oil supply, which will mean that oil prices will go up, and that's exactly what we saw. Slight increase, slight bump up in oil. Crude has gone up to around $90, Brent currently, or rather $91 as we speak, and Brent has breached that $97 a barrel mark as we speak. Moving on to gold. Gold remains under pressure as the dollar index continues to gain. In fact, the dollar euro parity has come back, and they're pretty much at $1 to 1 euro. And when I'm talking about the dollar index, that's gone up towards that 109 mark. So it's at around 108.9 as we speak. And gold therefore is in withdrawal mode. Gold has gone into $1,750 an ounce as we speak at the moment. Moving lastly to bonds and crypto. Well, bonds, the US 10-year bond yield has inched above that 3% mark. Mind you, a shade below 3% when we spoke yesterday, just above 3%. 3.02% is where it's at the moment. So a couple of bips of gains there. And cryptos, of course, largely flat on the back of the stronger dollar. Bond yields going up, cryptos largely flat. Bitcoin continues to be at $21,500 as it was yesterday.